Welcome to the Pathways to Success. I'm Julian Placino, recruiting professional turned success speaker, show host, and media entrepreneur. This show is dedicated to helping you find your unique pathway to success by having conversations that educate, inspire, and transform. Together, we'll interview some of the world's greatest leaders and uncover their secrets to success. Thanks for tuning in, and on to the show. Welcome to episode 197 of the Pathways to Success, where we help you find your unique pathway to success by having conversations that educate, inspire, and transform with the world's greatest leaders. I'm Julian Placino, your host, and we have a great show in store for you today. Today's episode is brought to you by City Central. City Central offers innovative workspaces for your business to thrive. City Central offers everything from private offices and co-working space to virtual offices and meeting rooms. City Central has 5 convenient locations in the DFW Metroplex, including North Dallas, Plano, Uptown, Richardson, and Fort Worth. If you use the promo code PATHWAYS, you'll get 50% off your first 3 months. So if you are looking for an innovative workspace for your business to thrive, visit citycentral.com for a free tour and use the promo code PATHWAYS to get 50% off your first 3 months. I am very excited to welcome back to the Pathways to Success, Christopher Manske, author of The Prepared Investor. Chris, welcome back to the Pathways to Success. How are you, man?
Doing great. Thank you for having me back.
Yeah, how was your drive up from Houston?
It was not bad at all. Beautiful weather and, happy to be here.
Awesome. Well, Chris, we have so much to talk about in a little bit of time, and I just want to jump right in if that's okay.
I think that sounds great.
Awesome. So, Chris, who is this book for, and why should they get it today?
Well, this book is for anyone who has a concern about the future, a crisis that could be looming. The questions that we hear a lot about are inflation, cyber threats, Russia, China, the national debt. When you're thinking about what's to come, this is the book that talks about how to be prepared for it.
Gotcha. Okay. And Chris, when you and I connected, it was back August of 2020. And what I thought was really interesting about the book is you were already documenting specific milestones about the coronavirus. So I'm curious, what has played out, and was it in alignment with what you thought was going to happen?
Well, it was perfectly in alignment. In fact, it ended up being a case study in the book. The publisher delayed the final manuscript being published and the launch date because we had this real clear right in line with what the book's message is, that there is a very clear way that you can prepare for crisis, and you can expect a certain pattern as people get afraid and then get comfortable with the new normal. And that's a big part of the book's motif, is that people change at a certain pace, and that you can start to see as crisis hits that, okay, here's the beginning of that fear, and here's the end of that fear. It takes a while for the markets to wash all that through, but there's a very clear pattern that exists in certain types of crises.
So I'm old enough to have lived through, I think, 3 crises. So the tech bubble, 2000.
Yes.
Terrorist attack, 9/11, 2001.
Yes.
Financial crisis, 2008. So I'm curious, what is different about this one, and has the market behaved differently?
Right. Well, so the coronavirus, as compared to the tech bubble, as compared to 9/11, they're all very different crises. And I think that what we hear from Wall Street is, we hear something bad has happened, so stay the course. Just have a diversified portfolio and just hold on. We'll get through it together. And this story that we've all heard really doesn't make a lot of sense when you consider that these crises are very different crises. And the reaction that people have to them is very different. So for example, the terrorist attack in 9/11, when you look at the market's reaction to that, it is nothing like the drop and slow recovery from the financial crisis of 2008. But Wall Street's story is exactly the same for both of them. And that's a problem. There is a way to be prepared for crisis. And the first step is to understand what makes these crises different so that you can be prepared for the ones that you have a lot of control over, and so that you can hunker down for the ones that you don't.
You talked about a pattern. What is that pattern of behavior? How would you describe it sequentially?
Sure. There's a real serious drop in the market as people react to the initial news. Then there is a day that occurs sometime shortly after that. When I say shortly, I mean within a month, where there's a lot of upward movement. Maybe you don't get back to where you were, but there's a lot of upward movement. And then within 6 months, you have a day where you touch back to where you were. And this graph is obvious to see crisis after crisis. There is almost a side of this. It's like, well, how are people not talking about this?
Yeah.
And that's the charts that are in this book. It's a very straightforward book that is for anybody to read. The only charts in here are charts that just show that curve over and over again, from World War I all the way to the coronavirus.
And where would you say we sort of fall in that chart right now?
Oh, we're past it. Coronavirus for the market is, it happened, and by the end of June, we were done with that active war market pattern, which is the phrase for that behavior. Yeah, the coronavirus, as far as the market is concerned, that initial response is done. There could be another response as coronavirus has some other problems or as quarantine has some other problems, but that would be a separate crisis.
So how would you describe the market right now to the newbie investor? How would you lay out the landscape for us?
Well, the first thing I'd say is right now it's quite high. The market's very expensive right now. It's difficult to find the good deals for a diversified portfolio where you have a little bit of everything and you're doing things, quote, according to the book. I'd also say that right now we have a special situation with looming inflation and our national debt. The debt drives a lot of this, and with our interest rates being so low, which I think is a result of our nation having such an enormous debt, interest rates so low, it's also very hard to find the bond part of a portfolio that we used to 10 years ago.
So I'm curious, if there was a particular mantra or underlying principle of your investment strategy for your firm and those that you help, what would you describe it as?
Well, I think you're supposed to invest for a reason. Sometimes people, they think, I just got a bonus, or I've just received an inheritance. There's been a large insurance payout and I have to invest it. Okay, but why? What is the reason for it? There should be a purpose, because when you invest, you do take risk. So why would you put this hard-earned wealth at risk just because you want to make more money? Is this not enough money? How do you know that? What are you aiming for? So I think that our mantra begins with, what are you aiming for? And if it's not clear, maybe we could help you to get a good idea of what that should be. And once we know, once the client knows what they're aiming for, then we can tie that portfolio design so that it's supporting their individual goals.
And we're definitely going to touch a lot more of that in a deeper fashion here in the second segment. So before we take our commercial break, Chris, let me ask you this. Can everyone become an investor regardless of the income that you have? And should they?
Well, I think everyone could, but it doesn't mean that everyone should.
Gotcha.
So for example, if somebody has worked in the military and they've retired and their lifestyle, they're comfortable at a level that is below their military pension, they might not have saved anything, and they might not be saving now because they have a pension coming in and they're expecting Social Security to kick in, later down the road.
Right.
These government pensions, it's more than enough. I could see them saying that, I don't need to invest. For most people, though, investing is a critical part of being prepared for the future, of making sure you've got independence, stability, security. And for those folks, the answer is, yeah, I think that it's important to invest.
I really appreciate that answer. So Chris, we're going to take a quick commercial break to hear from our amazing sponsors, and more with Chris Manske when we return.
You want to transition out of your career and do something tech related. CodeUp is the place for you. When I came to CodeUp, I was actually working at a chain hair salon. It was just starting not to be for me anymore. My goals were to never work a weekend ever again, to have full health care and benefits, and to just have more time with my son. And now I've met all of those goals. I don't have any regrets. I just regret not coming sooner when I saw those billboards and I was driving down the highway.
And we're back with Chris Manske, author of The Prepared Investor. Chris, before we jump into our second segment, I have to give you a small gift courtesy of our friends at Dead Soxy.
Wow, fantastic.
So your very own pair of Dead Soxy socks.
Thank
Open
you
that
so
up
much.
and let's
This
see what
will
you got.
really
Yeah.
add to the black sock repertoire that I've got. So 2 thumbs up.
Awesome. Thank you, Jason Simmons and Dead Soxy, for supporting the show. So, Chris, I want to jump right in, and there's a lot of topics that are so relevant, especially now. You said the word already, stimulus. Tell us a little bit more about what stimulus is and how it should affect the way that we think about investing.
Well, there's a lot of ways to think of stimulus. You know, for I have relatives that they look at stimulus as a way to make sure that they get through difficult times when their job isn't available to them. But another way to look at it is from an investing perspective, which is that it's extra money in the economy. Stimulus is, you know, in many cases, going to be a part of our inflation discussion.
Right.
So money supply and inflation are very tightly intertwined. Most of the time, people think of inflation, they think of CPI, the Consumer Price Index. But I encourage anyone that's listening to this or watching it to think about or Google CPI and see the problems with it, because it's calculated, first of all, it's calculated kind of behind the scenes. You can't see the raw data. That's private data that the government won't share. And in the time you and I have been alive, the way the government calculates CPI has changed over 20 times.
Yeah.
It's changed by the government that is in debt. And if CPI were to go up, they would have to pay out more to Social Security and pay out more to welfare. So you want to have those facts in your mind when you're considering stimulus, money supply, inflation, CPI. They're all so intertwined, and the debt kind of looms over the whole thing.
You know, we can go a whole rabbit hole talking about like the dilution of the value of the dollar because you're increasing the money supply. But when we talk about stimulus, if you could share with our viewers, like when they're listening to the news, what are the forms of stimulus that are coming into circulation right now?
Well, I think the most common one is government stimulus, the packages that business owners and individuals can receive. The very first package that went out, there was very little transparency, and I was quoted in Forbes related to how much of that money did not go to small business and instead went to Fortune 500 companies.
Yeah.
So it didn't work out perfectly, but still, something is better than nothing. It was something that was needed. And today, when people are thinking stimulus, what I'm hoping they're thinking is, when does it end? When do we move past this and get the train rolling again?
Yeah. Inflation. What is the definition of inflation?
The dollar not being able to buy as much because it's not as valuable. Or an even better way to think of that is you had $100 in the bank and it would buy 10 loaves of bread, and that same $100 now only buys 7 loaves of bread. It's the same amount of money, nothing changed, but it's power has changed.
And try to come at it from a different angle. Why does inflation take place?
Well, when you think of the amount of dollars that are floating around in our economy, if there's very few dollars, then those dollars are probably worth more because the activity of the economy is the same. Then the next day, if there's a lot more dollars, that same economic activity means that the dollar is worth less.
Right.
And a lot of times when they talk about this, they're thinking, how do I protect my savings account from going down in value? And the answer I think you hear the most often is either gold or Bitcoin. You know, it depends, I think, on age group, right?
Sure, yeah.
You know, one side is gold, the other side is Bitcoin. But the truth is that anything that is not the dollar is a way to hedge against inflation.
Is a way to hedge against inflation. Okay, so I definitely want to jump into those things right now. So you mentioned Bitcoin and sort of like alternative. I mean, how do you even, to someone who doesn't know what Bitcoin is, but now it's a conversation you and I are having here.
Yeah.
So what is Bitcoin and why should we know about it?
Bitcoin is a cryptocurrency, and it is lauded by many as a replacement for fiat currency, so government-backed currency. I'm not sure that that it's reasonable to say that that is in the future, but that's what Bitcoin is. When we think Bitcoin, I suggest that people think not just the good side. Well, I could use this as a form of currency as opposed to the dollar or the euro or the yen or something. I'd say think about the other side is it rare? Because a lot of times someone that really loves Bitcoin, they say there's only so many Bitcoins that are possible, which means that it's a finite amount, which means that the value will always, the more demand, the more value that this will have. But the problem is that there are hundreds of different kinds of cryptocurrencies. So while Bitcoin, there's a finite amount, if you go onto one of the exchanges like Coinbase, try to open up an account with Coinbase, you can just scroll through and see all the different types of cryptocurrencies. And one of the jokes I think in the more conservative financial circles is that Bitcoin is MySpace and Ethereum is Facebook.
It's Facebook, okay, yeah.
So, meaning that Bitcoin won't probably last because it's a little too basic and Ethereum offers more capabilities. But even then, the idea that Ethereum would be an actual currency that we're using instead of government currency, that's a tough one for me to swallow. I haven't seen it yet. So
in the very beginning, it was like this big hoopla about Bitcoin and everything, and there were all sorts of
it's still
misinformation about it, right?
Yeah.
So I'm curious, though, but why is cryptocurrency in general seemingly becoming much more legitimate nowadays than it was when it first came out?
Well, that's a really good question. I'm not sure that it does seem more legitimate.
Okay.
I think it's just that it's more prevalent in our conversation.
Okay.
I think that social media and the interconnectedness of our world today means that we're more aware of its existence. But I have a hard time seeing it as more legitimate. I mean, just the other day, Elon Musk had said we're not taking payment in Bitcoin.
That's right. Yeah.
And so, this is so volatile. I mean, one minute Bitcoin's in, the next minute it's out. And when you watch that movement of value on Bitcoin, I mean, you really need a strong stomach. It's not a place for people who want to be able to control the risk that they're taking, because it's a really difficult risk to measure. Yeah.
I know we're jumping around, but I want to go back to inflation because something struck me, because the reason why inflation is so important to me, especially because, I'm now investing as well. And it's like the value of your cash in the bank slowly erodes, maybe faster nowadays, I don't know, because of what's going on when it comes to stimulus. So when it comes to preparing for, well, first off, what are the levels of inflation right now compared to what you have seen in the past?
Well, I don't think that levels of inflation right now are terrible if you compare it to the late 70s.
Yeah.
And I don't yet see any of the major analysts saying things that compare the terrible inflation of the 70s to today.
Yeah.
But just like we were as a nation a lot more worried about coronavirus than we were SARS and MERS and the other respiratory illnesses. I think it is our interconnectedness. Social media shows us somebody's comment about inflation a lot faster. So even though the inflation numbers aren't as bad as they were in the 70s, I think we're all a lot more touched by the reality of this fear.
So how do you begin to advise someone who wants to begin to protect themselves from inflation? What does that look like?
Well, I had said earlier that anything that is not a dollar is going to be a hedge against inflation.
Yeah.
So if I was in the car business, I would say you should own a lot of cars because those cars, today it costs $100 to buy it, and tomorrow they'll be worth $120 because that's the way inflation works. If I was in the business of making bread, I would say hold a lot of loaves of bread. Get as many bread loaves on the shelves as you can. I'm in the business of financial management.
Sure.
So I say stocks. Why not own companies? These companies, let's just take a company like Kellogg that pays a good dividend. It sells a basic staple that everyone in the country knows and likes, and so that product, that cereal today is $2 a box. Inflation means it'll be $3 a box.
Right.
So when we look at the revenue of Kellogg today, that revenue is X, and after inflation has really had its toll, the revenue will be so much more. There won't be more profit,
Right.
but there will be a lot more cash flow, a lot more revenue, and these are numbers that drive valuations, and so that same dollar will buy less amount of stock. Any of those non-dollar items are good hedges against inflation.
Makes sense. Is there such thing as kind of an ideal portfolio allocation for most people?
I don't think so, no. And Wall Street would love for us to say that there is, because that makes it easier for them to sell to everybody. The idea of a cookie cutter, hey, 50-50 stocks and bonds, or 60-40 stocks and bonds, but the individual's goals will drive the amount of risk they need to take. And when you look at it from that perspective, the cookie cutter just doesn't even make sense.
So the national debt, why is this an issue that affects the individual investor?
Well, if we weren't talking about the government and we were just talking about a family, and there was a debt looming over their head, we would all agree that this is a difficult thing to deal with. We know that there's people out there that we owe money to. We have to pay them back. There needs to be some activity. We're on the hook. How much does each person in the family have to come up with? What's the story?
Right.
Well, for this debt, this national debt that we're talking about, each taxpayer has almost $250,000 as their share. Each taxpayer has almost $250,000. How is that going to get paid back?
Yeah.
And this isn't a partisan politics subject.
Sure.
This is not one party versus the other. It's a leadership subject. How do we address $24 trillion in debt in a nation with 300 million people and 150 million taxpayers?
Yeah.
That is a tough issue.
What happens? What do you think is the solution? It's got to be policy. It's got to be, and again, I don't want to get too political about things, but I guess it all boils down to me. What does the individual, can they do to protect themselves? And it seems like diversification of your resources into things that have value.
Well, I think there's a lot of things you can do. This book is filled with 20 action steps.
Yeah.
And a number of them would directly address this. So just really fast, one thing to do is, if you're spending money on things and the money is gone forever, you probably should stop doing that. Consider spending your money on things that will then pay you back.
Right.
When you buy the fancy car and the enormous house, you're showing people that you used to have money, but it's not there anymore. What you want to do is buy things that pay you back, and it doesn't have to be stocks and bonds. Obviously, that's my expertise, so I think it's a great way to go. But somebody who's in real estate would say to buy investment properties. Somebody who they own car lots. They'd say, get into, car lots. But when you're spending your money, if it's gone forever, that's probably a bad thing, because there's going to be a point in the future where the dollar is weaker.
Yeah.
How are you going to be ready for that? Another example of what you could do is consider your portfolio. You had said diversification. Most of the time when we think portfolio, we think of stocks and bonds, mutual funds, ETFs, things that people in my field deal with. But a portfolio can be a lot more. You could have a portfolio of the traditional things, stocks and bonds, augmented by a business run by somebody else. They're doing the work, and you collect a small portion of the profit. You could have another business. You could have a piece of income-producing real estate. There's just so much that can be done to augment your financial picture so that as problems occur, you're so stable, it doesn't knock you over.
That's great advice. I want to give a shout out to everyone here tuning into the live stream. I see Matt Gomez from Houston.
Oh, great.
Billy, thank you all very much for tuning in to the live stream. If you have questions for Chris, please submit them through the chat here on YouTube. So Chris, you said there is a right way to save. What is that right way?
Yes. So this book is about thinking things through differently. Mm-hmm. The Prepared Investor says that Wall Street gives us stories like just stay the course and don't rock the boat, get through the crisis. Mm-hmm. But when you dive into it, you can see that there's a lot more to that story. Saving is the exact same thing, and it's a big part of the book. The story is set it and forget it, right? How many of us, we get paid, we put some of that money aside, and then we can spend the rest because we saved our set it and forget it, or out of sight, out of mind. These are the things that we're encouraged to do. But really, this is a system designed to make us consumers. It's designed so that we spend our money and the money is gone. So let's talk about that.
Yeah.
Let's look at a couple where the wife is a consultant and the husband is a lender with a major U.S. bank. They're saving every time they get paid every month, set it and forget it. It's, a certain amount is going to their savings account. And 5 years later, they're frustrated because they don't see their net worth growing the way they feel like it should. They make a good amount of money. Where is the money going?
Yeah.
And when we examine that 5 years all at one time, we see that together they had 3 different promotions. There were 8 different bonuses paid out. She had a big time of overtime where there was a lot of extra hours on a consulting project, and she made a lot of extra money. They had a big garage sale, and all of those extra funds, they go into the checking account. They're saving, set it and forget it. And so because of that mentality, I have already saved. The rest of the money is available to be spent, and it was. Yeah. Maybe they pulled something aside, but the system is set up to turn you into a consumer. And what I suggest in the book is, let's flip it all around. The right way to save is everything you make, garage sale, bonus, regular salary, it all goes into your savings account. Everything goes into savings first. And then you allocate, you set it and forget it, your lifestyle.
Your expenses.
Yeah, your monthly budget comes out and it doesn't change. The only way your lifestyle will change is if you purposefully, you consciously go in and you change that amount of money that's going from savings to checking. And what I just described, that's lifestyle creep. Mm-hmm. People talk about lifestyle creep and how it's a bad thing, but how do you fix it? This is how you fix it. Lifestyle creep exists because of set it and forget it. Because you were told that if you just pay yourself first is another phrase.
Right.
Pay yourself first and you're all set. No, you're not all set, because over time, your finances are going to change. Before we began filming, you'd mentioned lumpy.
Right.
I love that phrase. Mm-hmm. So many of us, we're entrepreneurial, we're in sales roles. Lumpy is exactly how the money is coming in.
Right, yeah.
So don't set it and forget it. Set your lifestyle and forget it.
That's a very interesting philosophy, because for a long time I lived by that, save 10%. I'm very grateful that I started that habit, because it built that habit of like saving and accumulating wealth to a certain degree, right? But you're right. It seems like most people have a tendency to sort of live on the increase of their income as well without setting aside. Yeah. You have talked about artificial intelligence and how that is affecting financial services. Tell us a little bit more about that.
Sure. So this also is a subject from the book, because artificial intelligence is radically changing the world we live in.
Yeah.
And years ago, that conversation, I had to begin with just convincing people that, you know, artificial intelligence is making a major shift for everybody. But today, I think you don't start there. Today, we start with, look, we know it's changing. We know that it's going to affect us. What do we do about it? And one of the greatest thinkers of our time, Yuval Harari, he's got a book that discusses, you know, this very concept. And his idea is that information is going to be the new currency of value. And the hard part of that is, well, how do we take advantage of that?
Yeah.
And so when I dive into that, what I've found is that when you read things like the MIT Future of Work report, that's put together by Raphael Rafe, the president of MIT, and a whole lot of scientists. When you read that, what you see is clear data showing that the middle class won't have jobs in the future. Wow. It's really frightening. And when you consider that from a crisis standpoint, it's something to be prepared for.
Yeah.
And so the idea that, well, information will be valuable, I don't know that we can take advantage of that. But what I do know is that companies will be replacing people with machines. Yeah. These smart machines, these robots will be doing the work. They'll be on the factory. They're already on the factory floor. You know, they'll be driving the cars. They'll be doing the middle class jobs that today we're not sure are going away. No, they're going away. I mean, I was talking with a client the other day, and he said that he had entered a restaurant, was seated, ordered, got his food, enjoyed it, decided to get dessert, paid, and left, and never saw another person.
Yeah.
So, I mean, the change is happening. So these companies, if you own companies, if you're buying companies, you own the robots. Robots and the AI, they're not citizens, they're property. So they're going to be owned by Fortune 500 companies. They're going to be owned by governments. To a lesser extent, they'll be owned by individuals. So I don't think that, you know, it's like the days of the lord of the manor and serfs and land was how you determined what nobility was. But I also don't think that we're as far into the future as Harari suggests, where it's information. I think we've got a good long time where the question is, who owns the most robots? And today is the time to buy these companies. Companies that are using robots and making robots, these are the companies to buy, because it's not yet caught on just to how ubiquitous it's going to be.
So you went a different angle than what I thought you were going to. I thought it was like technology when it comes to investing, right? But you're talking more about like what's going to be happening in the market and how that's going to affect everyone financially. So I'm curious then, how do you stay informed of trends? What are the knowledge resources, magazines, books, news, media? What do you pay attention to help guide your investment strategy?
Yes, it's an excellent question, and there's an entire case study in the book that talks about how you're supposed to collect your information. And there's 2 points I'd like to make on this. One is you can't collect your information through social media. And the reason is because social media is geared to give you what catches your attention. It's not giving you the news, it's giving you what will capture your attention. So there's going to be a whole slew of opinions and facts and current events that you either are completely unaware of or you only see one side of if social media is your news source. So I urge people to use social media as a networking tool and not as a staying up on current events. Okay, so then the question is, how do you do it? Well, first is double up your news sources. So earlier we had said that the debt is not a partisan politics item. Most major crises, it's not going to be Republican versus Democrat, but there's definitely different ways to look at them. So you need to have a conservative news source paired with a liberal news source. You want to get both sides.
Okay,
If you
yeah.
have news from an odd number of news sources, then I'd suggest you need to add one more.
Yeah.
Because you want to have them paired up where everything is coming to you, two sides of the story as best as you can create it. And then the second point I'll make is leaders, especially leaders that they have nuclear arms at their disposal. There's only so many of those people. It's good to follow those people. The internet allows us to touch these people in a way that a regular citizen never could years ago.
Mm-hmm.
Take advantage of it. See what they're doing, see what they're saying, what are they voting on, where do they spend their time. I don't mean stalk them, but I mean reasonably connect with them using the simplest Google tools that you're comfortable with, or if you have more deeper pockets, you can pay for intelligent data. You can pay for intelligence to be reported to you on a regular basis.
That makes a lot of sense to me, Chris. I appreciate that. Chris, if there were just maybe one or two steps that all of our viewers and listeners can take immediately after listening to this show to begin to be a prepared investor. I know there's 20 steps in here, but what are those first couple of steps that you recommend?
Well, I think first is to embrace the mindset of looking at things differently. My book's been compared a lot to Outliers by Malcolm Gladwell.
Right, yeah.
Because Outliers says, hey, there's a story that everyone's heard about success, the self-made man. Well, let's really look at this. Does it make sense? And it doesn't. And that mindset is a powerful one where it's a little bit of cynicism and a lot of curiosity. I think the first step is to just look at things a little bit differently.
Yeah.
Because when the party line is stay the course, we'll get through this together, it's okay to ask why.
Yeah.
Okay, so that's the first thing is mindset. The second thing is what we had talked about is it's a click of the button. Have every dollar that you make anywhere in your life, make it go to savings first. And then set your lifestyle and take control of your life. Take control of what are you spending so that your lumpy investments, your lumpy income, it's coming in and staying in.
Yeah. Chris, close us out with what would you consider to be the best financial piece of advice that you have ever been given?
Make the right comparison. So what I mean by that is it touches everything in life. So early in my career, I was approached by another financial advisor because that advisor, he was coming home late 2 times a week, and his spouse was upset with him that he wasn't around. And he approached me because he says, you're home late like every night. What is happening at home? And I realized I was taking for granted a really important gift that my wife was giving me. And so we were talking, she and I were talking, and she says that, well, of course I'm not upset. I mean, when you were in the military, she met me when I was in the Army before my finance days. When you were in the military, I mean, you might be gone in another country. I was just so glad that in the middle of the night, you're there every night.
Yeah.
And it's a comparison. It's a comparison. We get to choose our comparisons. So when you're making your comparisons financially, intellectually, relationships, I mean, in all realms of your life, if you're feeling some unhappiness, it's probably because you're choosing to make a bad comparison. Make a good one. Make one that forces you to say, I'm so grateful. I'm so happy. This is so lucky. And when you're saying that, you're probably making the proper comparison.
I love that, and that is an incredible point to end upon, Chris. So, Chris, this has been amazing. Please tell us how to check out the book, how to check out your firm, connect with you on social. Tell us all that.
Sure, thank you. Well, The Prepared Investor, it's easy to Google. My name is Manske, also easy to Google. Amazon is a great place to buy the book. If you've already read it, please do talk a little bit about it on Amazon. Give us those comments. I know the publisher would be very happy about that.
Awesome. Chris, this has been incredible. I'm so glad that we've connected through this platform. I'm sure we'll continue to be in touch and be friends, and I'm sure I'll be asking you for some financial advice as well. So thank you very much.
Oh, thank you.
And everyone else, thank you all for tuning in to another episode of the Pathways to Success. If you enjoyed this interview, please hit that subscribe button, subscribe to the show, share this out with people in your network, and we'll see you next time on the next episode of the Pathways to Success.